lumbo wealth and financial freedom, life-shattering crashes and devastating scams. For the last decade, you've been bombarded with two conflicting stories about cryptocurrency. One promises a golden ticket to a decentralized future, a world where you are your own bank. The other warns of a digital house of cards, a speculative bubble fueled by hype, ready to collapse at any moment. So, which is it? Is crypto the most important technological and financial revolution since the internet? Or is it the biggest casino in history, cleverly disguised as an investment? The truth is complicated. And today, we're going to untangle it. We're going to cut through the noise, the hype, and the fear to answer the one question that really matters. Is cryptocurrency actually a good investment? What even is cryptocurrency? To understand if it's a good investment, we first need to agree on what it is. Forget the jargon for a moment. At its heart, a cryptocurrency is simply digital money. But it's a special kind of digital money. Unlike the numbers in your online bank account, which are controlled by a central bank and a government, cryptocurrencies are built on a technology called blockchain. Imagine a shared, public notebook, a digital ledger. Every time someone sends crypto to someone else, a new entry is written in this notebook. But here's the magic. This notebook isn't stored in one place. Thousands of copies are held by people all over the world. To add a new transaction, all these computers have to agree that it's valid. This process of agreement is called mining or staking, and it's what keeps the network secure. This makes it incredibly difficult to cheat the system. You can't counterfeit it. You can't spend the same coin twice. And in most cases, no single person or company can shut it down. This core idea of decentralization is the foundation for everything we're about to discuss. Bitcoin was the first, but now there are thousands of cryptocurrencies, from Ethereum, which acts like a global supercomputer for building applications, to countless others trying to solve specific problems. So, with that foundation, let's build the argument for investing in crypto. This is the bull case. Let's start with the most obvious reason people are attracted to crypto: the potential for incredible returns. In the traditional stock market, an investment that doubles your money in a year is considered a phenomenal success. In crypto, assets can do that in a month, a week, or sometimes even a day. This is what investors call an asymmetric bet. Your downside is capped at what you invest, but your potential upside is, theoretically, astronomical. The second major argument is that certain cryptocurrencies, especially Bitcoin, can act as a hedge against inflation. Think of it as digital gold. Governments can print more money whenever they want, which devalues the currency in your pocket. Bitcoin, on the other hand, has a fixed supply. There will only ever be 21 million Bitcoin created. This scarcity, like gold's, gives it a potential store of value that isn't tied to the decisions of a central bank. Perhaps the most powerful argument for crypto isn't about making money, but about building the future. Many believe this technology is the foundation for Web3, the next evolution of the internet. Web3 is an internet owned by the users, not by giant corporations. This is enabled by things like DeFi, or decentralized finance, which is rebuilding the entire financial system, lending, borrowing, trading, without the need for banks, and NFTs, or non-fungible tokens, which are creating a way to prove ownership of digital items, from art and music to in-game items and event tickets. Investing in cryptocurrencies that power these systems is like investing in the internet infrastructure back in the late 90s. The potential is enormous if this vision becomes a reality. But for every bull, there's a bear, and the arguments against crypto are just as compelling, and frankly, much scarier. This is why you could lose everything. The number one risk is volatility. The same force that can generate 1,000% gains can also deliver 80% losses. This isn't a bug. It's a feature of a young, speculative market. Your life savings can be cut in half in a matter of weeks. If you can't stomach that kind of psychological pressure, this space is not for you. Fortunes are wiped out as quickly as they are made. Cryptocurrency exists in a global gray area. Governments around the world are still deciding how to handle it. Will they tax it, regulate it, or ban it outright? A single piece of legislation from a major country, like the United States, could send the entire market soaring or crashing. This regulatory risk hangs over every single crypto investment. In crypto, the phrase "be your own bank" sounds liberating, but it also means be your own security. If you lose the password to your digital wallet, your private keys, your money is gone forever. There's no customer service number to call. The space is also filled with bad actors, from hackers who target exchanges to scammers creating fake projects designed to steal your money. It's a digital Wild West, and you are responsible for your own safety. Finally, the most fundamental critique. Critics argue that cryptocurrencies have no intrinsic value. A stock represents a piece of a company that makes profits. A bond is a loan that pays interest. Real estate provides shelter. But what is a Bitcoin? It's just code on a computer. Its value is only what the next person is willing to pay for it. The truth, so, is it a good investment? So we have the bulls and the bears. A revolutionary technology versus a speculative bubble. What is the truth? The truth is, cryptocurrency is not a traditional investment. It is a high-risk, speculative technology bet. Calling it a good or a bad investment is the wrong question. The right question is, does a small, speculative allocation to this asset class fit within your personal financial goals and risk tolerance? So, if you're considering it, here's a responsible framework to think about it. This isn't financial advice, but a guide for your own research. Don't buy a coin because a celebrity tweeted about it. Understand what the project does. Read its white paper. Who is the team behind it? What problem does it solve? If you don't understand it, don't invest in it. This is the golden rule. If your crypto portfolio went to zero tomorrow, would your life be ruined? If the answer is yes, you have invested too much. For most people, this means a small percentage of their total investment portfolio, perhaps 1 to 5%. Trying to time the volatile swings is a recipe for disaster. The most successful crypto investors are those who believe in the long-term technology and are prepared to hold their assets through brutal bear markets that can last for years. Don't go all in on one obscure memecoin. A more measured approach is to have a larger allocation in the more established projects like Bitcoin and Ethereum, and smaller bets on newer, more experimental projects if you choose. Conclusion. At the end of the day, the story of cryptocurrency is still being written. It's a technology with the power to reshape finance, art, and the internet itself. But it's also a technology in its infancy, raw, untamed, and incredibly risky. It is not a get-rich-quick scheme. It is a ticket to a front-row seat for a technological experiment of a generation. An experiment that could either fizzle out into a historical footnote or become the very foundation of our digital future. Whether or not you choose to buy a ticket is a decision only you can make. Just be sure you understand the ride you're signing up for. What are your thoughts on crypto? Are you a bull, a bear, or somewhere in between? Let us know in the comments below. We read every single one. And if you found this balanced analysis helpful, consider subscribing for more deep dives into the technologies shaping our world. Thanks for watching.